The push for tax reform. A new study by the Nonpartisan Tax Policy Center finds that the House Republican tax package would add $1.3 trillion to the national debt over a decade, even after accounting for new economic growth from the bill. Joining me right now to weigh in, the Director of Office of Management and Budget, Mick Mulvaney. Director Mulvaney, good to see you. Thanks so much for joining us this morning.
Maria, good morning. Thanks for having me on this cold Tuesday morning.
Oh, well, thank you for being outside. I know that camera position is tough because you also are outside. But what do you think about all these estimates, Mick? Because you even have the Committee for a Responsible Budget calling this historic debt increase passage and saying that the Senate tax plan is just as bad as the House plan because it's a fatally flawed budget buster, and you cannot pay for this with growth.
A couple different things. I think whenever you get a report from an outside third party, it's valuable to look at who they are. I think the Tax Policy Center is a joint venture between Brookings and the Urban League, not the two most right-wing groups in the city. So it's probably not surprising they're coming out with a report that's critical of the administration or a Republican plan. But there's other groups that have criticized it as well. But when you look at those, at any of them, I think you need to look down at the details of the methodology. A lot of folks, for example, have come out this week and say, well, as written, the plan would actually increase taxes on some people in years 6, 7, 8, 9. That's right, because hardwired into it is a proposal that the individual tax reductions expire after 5 years, but that's not our policy. That's simply the way to try and shoehorn the bill into these arcane rules in the Senate. So you have to look at the methodology. You can't simply look at one report and say, oh my goodness, taxes are going up, and then dismiss the plan. I think the plan is an excellent plan. The House worked really, really hard, came up with a good couple of proposals. The Senate is working as well. We're very satisfied with the progress that's going on so far here at the White House.
So in the next couple of weeks, we're going to see what's called conference, go into committee, looking at both of these plans, the House and the Senate bill together to try to come up with legislation that will go to the president's desk. Are there any areas that you see as so-called pay-fors? Are there any areas that you can actually say, okay, well, that can get us $1 trillion or that could get us $500 billion? Maybe, you know, that as a way to pay for this.
No, I think from the very beginning, we've been very straightforward here at the White House, saying that we do believe that the growth that will come from this will help pay for this thing. Keep in mind, right now, the assumption at the Congressional Budget Office, for example, is that the economy will grow 1.8% to 2% for the next 10 years. We're getting ready to talk about coming out at 3% growth for the next 10 years. The difference between those two things doesn't sound like much, but it's $2.5 trillion extra worth of government revenues. You can pay for a lot of tax reductions with $2.5 trillion of extra growth. So, no, we really do believe that when you look at the growth that comes from this plan, that's what's pushing our interest in this.
So you do believe what the president said, and that is that every point of GDP increase is equivalent to $2.5 trillion in revenue?
I think that's over a 10-year budget window. But, yeah, we've got numbers, I think, that back that up.
All right. I want to get to actually getting passage here, because no matter what you say, if growth is going to help pay for it, or good plan, bad plan, you got to pass this thing. And where Republicans in the Senate hold a slim majority. Listen to what White House Counselor Kellyanne Conway had to say when asked whether Alabama voters should elect Roy Moore in next month's special election to get the tax reform done.
Doug Jones in Alabama, folks, don't be fooled. He'll be a vote against tax cuts. He's weak on crime, weak on borders. He's strong on raising your taxes. He's terrible for property owners. And Doug Jones is a doctrinaire liberal, which is why he's not saying anything and why the media are trying to boost him.
So vote Roy Moore?
I'm telling you that we want the votes in the Senate to get this tax bill through.
You agree with that? Just regardless of these allegations around Roy Moore, you need that vote?
Well, not regardless of the allegations. I think the White House, the president, has said very clearly that if these allegations are true, that Roy Moore should resign. He's been very clear about that. But he's also said that the voters of Alabama should decide. And as they go in to decide who they want to vote for, they should consider how that person is going to vote. I don't think it's making any news to think that a Republican administration wants somebody in the Senate who would actually vote for a Republican agenda. And then if they elect a Democrat to that office, that's not going to happen. So I don't know why that's getting as much attention as it is.
All right, obvious. That's pretty obvious. Let me ask you about actual passage, because we know that the president has had issues with John McCain, Bob Corker, Jeff Flake. Do you think they're going to have the votes in the Senate to pass this?
I do. I think we've got to work through some there's one big sort of substantive piece of the puzzle left, and that's the one that Ron Johnson brought some attention to this past week. And I think that's how to handle pass-through entities, these S corporations, LLCs, and partnerships. I think that's the one big substantive point that needs to get worked out. A lot of the other things are still not settled, but they're more down at the level of a smaller detail. There's a big substantive piece left.
And that
once that gets worked out, I think you see folks fall in line behind a good piece of policy. Jeff Flake is not going to vote against a good bill because he likes the president any more than he would vote for a bad bill because he likes the president. I think I misspoke there, but you think you'd see what I'm saying. That folks are going to vote on the substance of the matter, not on their relationship with the president.
Yeah, but what about this issue that Ron Johnson brings up? I mean, how did you come to the idea of putting pass-throughs at 25% and corporations, big corporations at 20%? You know, Mary Kissel from the Wall Street Journal editorial board made a remark on my show Sunday, basically saying, you're talking about pass-through companies. This is not just the hardware store on the corner. Cargill, with 150,000 employees, is considered a pass-through business.
Sure.
So how come they're getting 25% rate while big corporations, global names, are getting a 20% rate?
A couple different things there. I think if you look historically, S corporations, LLCs, pass-throughs have always paid a slightly higher rate at the top end. For example, right now the top corporate rate is 35, the top pass-through rate is 39.6. So that's a reflection, I think, Marie, of the fact that those pass-through entities are only taxed once, whereas income to corporations is passed twice before it gets to its owner. So I don't think that's violating any sort of principle. But I do think it's the issue that needs to be worked out so that everybody's comfortable, that everyone's being treated fairly. The House did it one way by having that 70-30 safe harbor. The Senate's looking at it doing a different way. There's a couple different ways to sort of slice this, but I think at the end of the day, when that gets worked out, everything else falls into place.